Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri Livestock Market Analyst Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Oh, do we get to talk a little bit about trade coming up a little bit, and it'll be a fun conversation. But to get things started first, let's talk about what happened this week in markets.
Yeah, so if we start on the hog side of the equation, cash hog market's up about $1 this week. Well, we saw really little change in that current lean hog futures contract this week. When we look at the pork cutout value, we did gain $1.50 this week in that pork cutout value. Both hams up nearly $5.70, bellies up over $6. Both of those, I think, were helpful to that increase in the pork cutout value. Despite the fact we got an increase again this week, we talk about that pork cutout value still more than 15% below where we were a year ago at this time. Switching gears on the cattle side, cash cattle, a pretty light trade, down $2.50 for this week. Feeder cattle actually started the week 2 to 3 higher, but by the time we got to the end of this week, they were trading 1 to 5 lower, and I think that was really in sympathy with some weakness that we saw in those cattle futures contracts here at the end of the week as well. When you look at the overall week, feeder cattle, that current futures contract was actually $2 higher with some strength early in the week, while the fed cattle contract, live cattle contract up $1.50. The choice box beef price was actually down $1.20 this week. Some weakness, especially on things like ribs, chucks, I think drove some weakness there. And now we have a situation too where that choice box beef price is now over 7% below where it was a year ago at this time. Neither one of those beef or pork numbers on the wholesale side make me very encouraged about where we're going to be here for a little bit.
I have a question about that choice box beef price. We had really seen some strength and some movement towards the positive in recent weeks. And we're getting to that time of year where seasonal demand is strong. Are we concerned that we're not seeing more support in that price at a time when we're seeing we would typically see more strength in the market?
Yeah, so we have gotten some run up, Megan. If you look back at like April 20th, we were at a situation where the box beef price was $2.11. We're sitting here today at about $2.28 this week. So we have gotten run up. The problem is it's not been as strong as what we would have traditionally seen, or certainly not what we saw when we went through 2017. So that does worry me, and I think it has, well, so a lot of things at play. You've already talked a little bit about trade and the fact that might be some troubling news for meat markets. But at the same time, I don't want us to forget that, we've got a lot of production out there on the market. If you look at just beef production year to date, we're up nearly 4% over a year ago level in terms of beef supplies. The same can be said for pork production as well. If you look at those 2012 to 2016, beef production setting about 7.5% year to date higher than where we were over the 2012 to 2016 period, while pork an astonishing almost 12% higher. So domestic supplies have been growing a lot. At the same time, you put some demand uncertainty into the mix, and I think that can certainly put some pressure on what might be seasonally higher wholesale pork and beef prices.
I think the big report today, and probably some good news that we're seeing, at least on domestic demand, on the domestic demand front, jobs report came out, and another big jump and another good month for unemployment and job growth.
Yeah, so if you look at that report we got this morning, 223,000 more jobs in May, beat pre-report expectations that we're expecting about 188,000 jobs. We ended up with an unemployment rate now ticking down to 3.8%. I was looking and we're reporting now May will be 92 consecutive months of job growth in the United States. That's the longest streak that we've ever seen. And so jobs is one thing, but actually on top of that, seeing some strength in wage rates as well, I think is helpful to meet demand. If you look at where we've been year to date, 2.7% higher on wages this year relative to a year ago. I think both of those things, thank goodness, are with us when we talk about the kinds of domestic supplies of meat that are on the market today.
I know we've had this conversation before, but I feel like one tiny hiccup in whether it's an issue with disease or an issue with jobs in the economy, and we're in a really pork and beef producers are put in a really bad position because any chance of profitability is likely going to go away.
Yeah, I think if you rewound some of our previous weekly livestock updates that we did, you hear me very often say I think there's more downside risk than upside potential. And all that we've really done is really add to that, more downside risk than upside potential, just given some of the things that have been happening in the marketplace. And I like to remind folks, all right, so trade matters here a lot, and it's troubling in terms of what it means for us. But the kind of domestic growth that we've seen in the beef and pork industries the last couple of years really meant we needed to keep the demand side really ticking on all cylinders. And we have actually, so when you look at 2018 domestic demand, it's been very good. Maybe not the stellar level that we saw in 2017, but if you just were to have a hiccup on the demand side here in the U.S. on top of everything else, I don't want to have to talk about that in terms of the downside potential that sets in these markets.
I think risk management is the key to that conversation that we have a lot, and those are things that producers have to continue to think about as we go through the rest of 2018, especially with some of this uncertainty that's out there.
So I do think you have to reset expectations as you think about that risk management. Too often we look at cattle prices where they are today and go, well, I'm not selling cattle today at these prices, when in fact the risk is more still on the downside. And we would use tools like futures markets to manage risk, not to maximize prices. And I think that's been hard for livestock producers to disentangle this risk management feature of futures markets versus I want the maximum price possible. And unfortunately, this lesson can get learned pretty hard, especially if we keep unraveling here. As you and I both know, freezers of meat stocks have been increasing, and you continue to expand them rapidly, and all of a sudden it gets pretty tough out there in meat markets.
Scott, Restaurant Performance Index came out this week. Overall, another good number for the month.
Yeah, if you look at the April 2018 number we got, 101.3 for that overall Restaurant Performance Index. That's still positive growth in that Restaurant Performance Index. It kind of matches, in my mind, where we've been seeing jobs reports and so forth. That is down 0.5% from where we saw the March number. That doesn't concern me, too much that we slowed a little bit. So 3 consecutive months of some increase going now. If you look at the individual components of that Restaurant Performance Index, current situation consumer traffic is the one that's down. That number came in at 98.3 for April, where it was setting at 101 for March. So we got a little bit of slowdown in customer traffic. We'll want to pay attention to that number as we move ahead. Still, when you look at the expectations component of that index, coming in at 102.1, still suggests a lot of folks are anticipating good news ahead on the restaurant performance side of the ledger.
All right, let's talk trade. As we get into it, the ERS released its quarterly estimates for fiscal year 2018 for ag export values. That's a pretty big number.
Yeah, so they actually show up $3 billion. So they forecast those fiscal year numbers every quarter. Came in at $142.5 billion now is their forecast for fiscal 18, up $3 billion from where they were back in February. So positive news. Now I think they'll say we're contributing that primarily to maybe a little stronger corn exports, a little stronger cotton exports. Don't see so much on the livestock side. Only up roughly 100 million on overall livestock and dairy and poultry exports. So crops has really been leading that when you look at the overall number.
The big news of the week yesterday, and I'll let you know, I'm at World Meat Congress here in Dallas, Texas, and the conversation has centered a lot about trade. Yesterday, we heard from ag negotiators and leaders on the NAFTA side of things from both Canada and Mexico. Secretary of Ag Sonny Perdue was here, and the announcement yesterday morning that Canada, Mexico, and the EU would no longer be exempt from U.S. tariffs on steel or tariffs on U.S. steel and aluminum. Mexico has announced retaliatory tariffs that look very similar to the trucking industry dispute several years ago. Pork is at the top of that list. How scary is that for producers to have this trade uncertainty as we're negotiating NAFTA or modernizing NAFTA, as other countries are working on trade agreements without the United States, and there's all this supply that has to go somewhere?
Yeah, so I think the way you finished is really important to the mix, given all the supply that's out there on the marketplace. This is where it gets a lot tougher because we need no hiccup in terms of trade. We can't really afford very long of markets with higher tariffs or potentially very little trade occurring because of that uncertainty. And that worries me a lot, just given where we are today. It was going to be a tough enough year as it is, given those domestic supplies. But when you see a number of these countries who are targeting things like pork, U.S. pork, for additional tariffs, those details, still are trying to come out, I think, as we sit here this afternoon trying to record this. But specifically what happens in terms of Mexico, Canada, et cetera, are really important to pork movements. And you have to remind yourself, Mexico's our number one market for U.S. pork. We really don't need to lose that right now.
And a big market specifically for hams. I mean, they're the number one consumer of, and trade groups and ag groups have done such a great job of maximizing, putting products where they make the most amount of money. Variety meats into Asia, hams into Mexico. Do we tell livestock producers to sit tight and to be patient? I feel for them as these conversations are looming and we keep talking about this mass amount of production.
Yeah, so the uncertainty, all right, that for me is the tough one. I do want us to negotiate and be tough negotiators when it comes to these NAFTA renegotiations or any other trade agreements for that matter. And sometimes that can make us a little queasy, I think, at times when it comes to ag products, because too many of, well, I shouldn't say too many, but many of our ag products, pork included, a very large percentage of our production's actually now leaving the U.S. Somewhere around a quarter of all pork being produced trying to leave the U.S. All of a sudden you slow that down and that backs up in U.S. markets, and it's really troubling. Now, not trying to take the other side too hard here, but we just talked about job support. I sometimes think some of what's been happening in terms of the overall trade outside of agriculture may have in fact created more jobs here in the U.S. than otherwise would be the case. Things like some of the tax reform that we saw, I think we are seeing that jobs report number. So we may be getting some stronger domestic demand than we otherwise might have gotten from that side. Yet that trade uncertainty just kind of looms over here as more of a problem.
It certainly is an interesting puzzle, and there are so many factions and pieces that have to be put together just right to find a mix that has profitability for producers, consistent demand, and those types of things. I don't envy the folks that are in those rooms hammering out those trade deals. Not one bit.
Yeah, absolutely. And you take pork in particular, and it's everybody along the way as well, right? We've been adding processing facilities going. We know we need more pork in front of us. We certainly want to ship more of that pork internationally. We highlighted China as one of the places where we'd like to move more pork. And all of a sudden you start to change the feeling of that trading game, if you will. And that can make folks very, very cautious or uncertain. And we've made a lot of investment here. And a lot of folks have made a lot of investment. There's been a lot of new facilities on the production side built as well. And all of that was with the expectation that U.S. trade and pork products would have a chance to expand in front of us. I sometimes go, the best decisions producers could have made 2 or 3 years ago now today don't look quite as correct. Is that really their could they have anticipated any of this? And I think it's hard to say yes to that, but it certainly puts us in a very difficult spot if we really see a curtailment of pork trade, let's say, and trade to our neighbor to the south with Mexico in terms of pork products.
And it doesn't just stop at pork products. It trickles back to your corn and soybean producers because they are the number one livestock producers are their number one customer.
Yeah, absolutely. So this is not just one commodity that's going to be affected. U.S. agriculture certainly will see the effects of additional tariffs on pork products going to places like Mexico.
We'll definitely have to sit back and watch and see how that all unfolds. Scott, reports next week that we're watching?
Yeah, not a lot next week. We will get a monthly trade data report out of ERS, so I'm sure we'll find next Friday a chance to talk a lot more about trade as well.
All right, Scott, good to see you. We will talk to you next Friday.
Very good.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can ask and you can subscribe. You can also submit questions and comments as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner from Brownfield.